Hello, everyone, and welcome. What you see here is an interview I recorded about 2 weeks ago. I had a really great time talking to Richard Patey. This guy knows his stuff. He's an experienced website investor with a background in building, buying, and selling. What you're getting here is an excerpt from that video because the actual interview went almost 2 hours. There was so much good stuff in there that I decided to release it in smaller chunks over the next few weeks. Richard was super generous with his time, and Richard, if you are watching this, I appreciate you so much. And without further ado, let's get into it. Richard, please just introduce yourself and give us just a quick sort of summary of what it is that you're about.
Okay, I build and sell content sites and specialize in an area called software review, and had some success in 2017 with an exit. And now I help investors find better deals and achieve more upside from those deals through a paid newsletter, and continuing to build out more sites myself.
So you just mentioned about 5 things that I think I could probably create like a whole interview on just by itself. Literally.
Well, yeah, I kind of see it. It's kind of 2 things. I build and sell, and then I work with investors to help them build and sell and make more money. So it's, I used to do a lot more than that. So I kind of, that's as simplified as I can get.
Well, when I was doing the initial research to kind of get ready to have this chat with you, I saw what I saw. Amazon, right? There was a book there. You'd written a book and published a book.
Well, that's true. That was 2013 before I knew what I was doing. Yeah, that's true.
And then I saw you listed on a website that was, I think, dealing with angel investors, like helping people get businesses started.
Wow, you've been doing your solicitor research, right? Due diligence.
Well, it's all those experiences make us who we are, right?
I do. Yeah, for sure. Yeah, I put some kind of random listing on Angel List. Yeah, nothing to note there. I mean,
did that ever go? Did that ever go anywhere as far as working as an angel investor?
Oh, right. Yeah, no, I had an angel profile. I've backed a couple of companies through crowdfunding. That's it. No, it's not something that I do. It's something that I'd like to do in the future. I mean, I've got Jason Calacanis' Angel book, and a big fan of him, and been into the world of startups for a long time. I've been watching, This Week in Startups on YouTube for probably close to a decade now. But it's not something that I do. I focus on investing in websites, things that I know, and then just other kind of more typical stuff, stocks and a bit of cryptocurrency. But no, I'm not an angel investor. Although I have put myself around as that previously, where it suits. But no, it's not. I'm not an angel investor. It's not what I'm doing.
Right on. Well, one of the reasons that we went ahead and scheduled this talk is because we connected sort of around the income store story. And I think that I would dream of being where you are now, in somewhere between 5 and 7 years. And so I've sort of been obsessively following sort of whatever you post and whatever it is you're doing, because that's how I learn. And
thank you. I feel like you're 1 to 2 years away, if that. We're not far away, honestly.
But it's really hard because it feels that way. Like folks like you and some of the other folks that I'm talking to, like it literally feels that you are light years away from where I'm at right now.
In terms of what? I mean, I see the videos that you're putting out in terms of, content challenge and optimizing ads, and what is it that I'm doing that you're not? I mean,
I feel like you guys are earning a lot more money than I am, I guess is what it is. It's just, there's a lot more money there.
Well, I've had a couple of exits, but, nothing life-changing. So yeah, I mean, I'm still hustling. I'm still trying to get to the capital level that I want to get to. And yeah, I feel like I'm getting stronger and more knowledgeable in this space every week that goes by. It's a nice feeling. It's nice to get momentum. But yeah, I'm not where I want to be in terms of having success. I want to repeat, multiple 6-figure exits, and then yeah, maybe move on to property and angel investing for real. But I'm still. I turned 40 and I had a goal of where I wanted to be capital wise, and I nowhere near where I wanted to be. So I've got like 2 to 3 year plan to get where I want to be, and then look at some other space. But right now, yeah, website investing space is very exciting. Lots happening, as you mentioned with Income Store, and then a lot of innovation, a lot of new platforms coming. You spoke to John with Motion Invest, and I really like that model. I'm connecting with more people who are, buying and selling sites themselves, so actually owning the properties, and so there's a lot more competition to the traditional broker model. And yeah, it's a really great space to be, with a lot of upside, a lot of ROI, and I'm still trying to find which pocket has the best ROI. And I feel like I'm getting really close to answering that question, and starting to do a lot of research into RPM. So that's a metric that we all know from ad networks. But overall site RPM, where it's a combination of ad and affiliate. I do pretty much all affiliate, and so what are the best niches? That have the highest RPM for me to focus on within the area of software review that I do. So still trying to find what the best category is within that to double down on. And then when I do, just hit it with 2, 3, 5, 10 sites in that area, and then see what's next. But the success that I had in 2017 with a site that promoted sales funnels, I should have just done 5 at the time. I didn't realize it was. I was on the wave of sales funnel software. It was a new thing back in 2015, 16 when I first got onto it, and the SERPs were new, the search volume was growing, and had I have known, I should have just done 5 sites and could have probably had 5 similar exits. So trying to find what that looks like in 2020 and getting closer, doing some cool niche research, keyword research, and yeah.
So one of the things you mentioned when you were chatting just now was about new platforms, and you name dropped Motion Invest, which if you follow my channel, you've seen that I've talked to them and then done a couple of videos about them. But what other platforms would you put in that bucket as far as new platforms coming online?
Well, yeah, I mean, there's what Andre's doing at Alpha Investors with Investors Club. And so that is no sale fees, no seller fees, which is pretty disruptive. And then a couple of ones that I'm aware of that are not public yet, but doing similar things. And I kind of, so I'm a big fan of Empire Flippers, and I've sold 2 sites through them now. And the 15%, there's a lot of value in that, like no doubt. And, they do a lot of vetting for on both the buy side and the sell side, and they make the transaction a lot quicker. But I feel that percentage is going to be put under a bit of pressure going forward. I think that there's going to be a lot of other ways of finding access to deals and going. I think that the trend is more direct.
Mm-hmm. I mean, Income School did that, right? They just listed their own sites on their website and just sold them for, I think, kind of, I don't want to say ridiculous multiples, but they were really good for what it was that they were selling.
And I'm seeing a lot of that. So a lot of people that have built an audience. So Adam Smith with Niche Website Builders with his business partner Mark and their Facebook groups, they can do that too. They can sell direct to their audience and ask for higher than average multiples because people trust them and they know how they build sites. And there's a premium for that quality and for that trust. And I think that's going to happen more and more. And I'm connecting with those kind of people. And yeah, I'm seeing more of those people who are building sites and portfolios themselves rather than selling direct. Another one is Hector from hekup.com, HEKUP.com. And yeah, if you can build your own list of interested buyers that appreciate how you build content sites, then yeah, you don't need a broker.
Mm-hmm. So if you were a person who is newer to this space and you wanted to sort of participate in this more peer-to-peer buying and selling, like where are places you recommend beginners go and just start lurking and just watching for deals?
Yes. So how do you get access to deal flow essentially as a beginner? As a beginner buyer interested in smaller deals? I mean, the best places for volume and smaller deals are the Facebook group. So the Flipping Websites Facebook group that I set up and transitioned through a deal with Alpha Investors who are now running the group. That's a great one. That's the biggest one. There's other Facebook groups. And I mean, that's kind of a problem that I'm solving with the paid newsletter that I have. So in fact, I need to check that it went out. But so it should have been scheduled for 6 p.m. UK time we're now 6:15. So my weekly one should have just gone. It's taking a lot of time. It's taken me like a full day, like 1 to 2 full days to do all the research. So with that, I'm looking through every Flipper listing that meets, minimum criteria, and then looking to see whether it could be a good deal. So I'm doing the kind of basic level due diligence, looking at the trend of the search traffic, and looking to see how pages are distributed. If there's not looking to see whether the top page doesn't have a huge amount of traffic, and other factors, looking at the link profile, anchor text, and content quality, and all these kind of things. And then if it's something that could be a good deal, I give my notes and thoughts on it in a weekly newsletter. And the same with brokerages. So I have a good relationship with Empire Flippers, and so I get access to their listings, and I recommend sites that look good there. And then independent brokers that I've created relationships with. So I kind of look at the whole market the best I can, and feature deals that look good to me. And so, I'm filtering out the deals that are trending down or have just had a Google update and people are trying to sell based on previous revenue and previous traffic. And so there's a lot of that. And so just trying to, protect people a little bit and give people a better head start, and to understand what a good deal looks like, and to stop people from getting burnt. I've been burned previously in acquisitions when partnering with investors. And so you kind of learn that the hard way. But if I can prevent that, kind of reduce that percentage from happening, then that's a good result of that paid newsletter that I do. So yeah, there's a lot of places that you can find it. I mean, Flipper is the biggest marketplace, and there's definitely some opportunity there, but there's a lot of listings that you have to get pretty good at filtering through and finding those gems. Yeah.
So as far as the newsletter, before we move on, this is a newsletter that you are creating on your own that people subscribe to, they pay you for it, and then it comes out, weekly, monthly, bi-monthly? How does that work?
Every Wednesday, yeah.
Every Wednesday. How much does it cost to subscribe to it?
I've $49 a month, $49 a month. I think going forward, that probably needs to be a little bit higher, because I do exclusive interviews with people investing in websites as well for subscribers, and also a Trello board of process templates, SOPs for managing content sites and getting upside out of them. So going forward, it's probably going to move into a slightly higher price point, but I've priced it intentionally low to remove any kind of friction. But that's what it currently is. And yeah, it's going well. Like I'm happy with the success that it's had. It's approaching 70 paid subscribers now, and launched first week of January. So it's doing all right.
Where could people find it? Like, where could people go and find out more information about this?
Sure. Thank you for asking. It's just richardpatey.com/premium. That's the paid newsletter, but I have a free one too, just a general free newsletter.
I don't mind at all, like, letting people talk about their products. I think this is great for people like me and folks who are in the same stages as me to know what is out there. And the more we can talk about products and what services, paid or free, and resources, because that's just going to spread out the information better. Because right now it feels like there's a couple people who are in the know, and everybody else is sort of like, what's, like, looking over the fence, like, what's going on over there, guys? Like, what do you know? Like, how do I find out what you know? So
yeah.
So do you post on your blog regularly also about website investing?
No, I really don't. So it's not something that. So I have a page on website investing. I think it's ranked number 1 for investing in websites. So I have kind of key pillar content, but I'm not blogging regularly on there. There's probably less than 50 pages in the Google index, maybe 100. It's been like a personal blog, and it started off as a travel blog. And I've got a page on content sites, one on website investing, and that's kind of pretty much it. It's not, so I don't, my content, everything that I'm doing currently right now is for the paid subscribers. So that's audio content, and then written content of those recordings, and then the deals, and then the process templates that are in a Trello board. So everything is for those guys. Maybe that opens up and becomes some public offering at some point in the future, but I'm not blogging regularly there. There's not a huge amount of keywords to go after either, to be honest. But
Now, one of the things that you talked about when you were talking about your newsletter was trying to filter out some of the not good acquisitions or sellers who were trying to dump sites that were trending down. And I just wondered if you could speak on potentially what sort of advice you might have for sellers who do have a site that is trending down, that they would like to exit at some point in the near future. Like what are their options, or what could they do to try and either sell that site even though it's trending down, or to maybe save it and make it into a more valuable asset?
So my advice for sellers with a site that's maybe been hit by a Google update, something like that, is to sell it immediately, because a lot of buyers are not aware of that. So, I mean, if it's been hit and it's still within the first, 4 to 6 weeks, it's probably not going to be picked up by a lot of buyers, and that's the danger. There's a lot of first-time buyers that are not aware that will just value based on the historical revenue. The last 6 months. If it goes up for the last 6 months, then I mean that's a pretty decent looking asset. But the level of traffic could have dropped. If you're not good at due diligence, then there's a number of things that could miss. So for a seller, I mean, you will see a lot. You will see sellers listing, having known that it's had a Google update, valuing 32x revenue based on the last 6 months. I mean, that is everywhere, and that's the kind of thing that I filter out and that I don't feature for buyers. But if you're a seller and that happens, then I mean, if I'm representing the seller, if I'm recommending what they do to maximize the amount of capital that they can get for themselves, list it immediately. Mm-hmm. So that's the tension in the marketplace. There's a lot of brokers do not filter that out.
Got it. But from the website operation standpoint, like let's say you don't feel comfortable trying to sell a site that has just tanked. I mean, I don't know that ethically I could put a site on the market and try to sell it when I know that it's just been decimated. If you're in that position, I mean, from the operation standpoint, is that just, continue to work on it and try to improve it again, to build it back up, doing whatever you can? Or is it just sort of like you're out and I'm sorry about your luck, that kind of thing?
I mean, you need to try and piece together what has happened in the most recent Google update, and wait for the blog post to come from Search Engine Journal, and then some of the bigger name bloggers in our space that put out content about what's happened. Yeah, I mean, you kind of just need to wait and see, look for where that search traffic has gone. So if you've dropped off page one, who's now replaced you, and see what they're doing differently, whether they have more social proof or better link profile, higher domain rating, better content quality, maybe not covering all the topics, maybe your content length isn't where it needs to be. But yeah, I mean, you don't know. So for the first week or two, you probably shouldn't do anything. And yeah, I mean, if you're going through this for the first time, you're probably panicking, so you probably do that. But yeah, you just kind of need to wait and see and spot trends, and then correct and kind of blend in with the top ranking sites. Just that's the only thing that you kind of need to do. You just need to stay within what the top 5 sites are doing, and blend in, and then you're likely gonna end up there too.
So from a buyer's standpoint, if you're looking back and seeing, looking at a site, doing due diligence on a site that does look like it has a historical hit as far as an algorithm update, how much time do you want to see before you might say, like maybe this is stabilized, or maybe this is a good site? Like how much time would you want to see?
Yeah, I mean, literally until it has stabilized. Mm-hmm. I wouldn't recommend trying to value a site until it has, and then you value at that new level.
So how far would you want to be able to look back then to say, I think it's been stabilized? Is that 6 months, 12 months, 2 years? I mean, what's stable?
Yeah, I mean, it depends on your risk tolerance. A lot of people would jump on an asset that's had a massive hit, that's stabilized and is looking like it's trending up again, because a lot of times what happens is you get hit by Google updates, maybe like September 24th, and then it corrects, January 13th or whatever, and your traffic comes back. You can see that a lot when you look at a lot of sites. They'll get hit, and then the next Google update they can regain. So if you can jump on a site where you're seeing like a tiny little trend in Hrefs, like a day or two, like a big tick up, then you could gamble and think that it's bottom, and that the next 6 months it's going to get back to where it was, and you've bought it at a big discount. But the issue is whether the seller will actually sell at where the traffic now is. So it's whether they're prepared to sell at a much lower level than where it was previously listed. So, yeah.
So what I've started to see and lurking in here online and in the comments of YouTube videos and also on Facebook is this trend towards people either starting funds to sort of crowdsource money to invest in a website, or to get together in pairs of 2, 3, 5, 10 to go in on a website and buy it. And to me, that there's alarm bells going off left and right. And I wondered if you could speak to, from your experience, what sort of dangers there are in these small groups getting together to go in on a site.
I haven't done it myself. I've partnered with individual investors, and I've got a long-term relationship with the guy that bought my site, and we've done a lot of acquisitions and new builds that we're currently doing together. I've not done any group buy stuff with other investors or worked with investors that have partnered up. I mean, I've helped. I've done some consulting with, 2 people that team up together to buy content sites, but like 10 people getting together, I don't have any experience with that. I would just say that diversification is what you want to achieve with content sites. If you have 100K to invest, it may be better to buy 2, 3, 5, maybe even 10. And this, what I'm moving to focus on now is the build side, where I'm buying domains that have been caught before they drop, age domains that have authority, have a strong link profile already, and then I'm investing content into those. And you get a big head start, and then look to exit within 12 to 18 months. That's what I'm focused on, and so I can do that with 5K budgets, but you need quite a bit of expertise in order to pull that off. So if I had 100K budget to invest, I would do 10 to 20 websites with that. But on the acquisition side, it's probably best to split that up into 2, 3 sites. The more sites you have, the harder it is to operate, to manage. It gets a lot more complex, so you run into that problem. But in terms of what investors should do, that they should divide their capital up into the maximum number of websites that they can. So if they are putting all their capital into one site through a group buy, that's probably not a good thing to do. But if they can do that and end up with equity in 10 different sites or 20 different content sites, in different niches, or even in the same niche, then I think that's a good thing to achieve. And so I think funds will play a very big role in the future. I think that's the direction that makes a lot of sense for investors. If they can allocate put their capital into a fund that then owns a basket of content sites, I think that's a very good thing for them to do, rather than 100K into each site and have that run, through an operating company, such as Income Store or other. So yeah, diversification is what you want to achieve as an investor. As an operator, you want to have that too, but then you end up with a lot of different WordPress installations and a lot of hard work. So there's that tension on the operation side, but as an investor, yeah, you want exposure to the maximum number, yeah, because then if one goes down, it doesn't matter.
So then, as a website investor who has little to no operation experience, what should these folks be doing to try and do their own sort of due diligence about potential partners, right? Because that was one of the issues with Income Store. There were lots of people who had zero experience in websites. They just were presented with this package and then left to, say sign or no, not, but having no understanding. Like, what could someone do to help vet that fund, that group, that operator who says, we're going to run it if you give us the money to go in? Like, what could you do?
Yeah, I mean, I would ask for proof that they have built and sold a site, or bought and flipped a site, or increased, upside of a site that they're currently holding. You want proof of their expertise. So yeah, you want them to convince you that they are skilled, they know what they're doing, they've had success, they've had successful exits and good acquisitions, and they're competent, they can keep up, they can get through Google updates. You just want, proof of expertise over, a good time frame.
So when you say proof, like, you mean Like what?
Yeah,
Like,
which that's the thing. So I mean, like, validating revenue and people's success, it is a tricky thing to do. So you need to go on. There's a lot of trust in this marketplace, and yeah, I mean, you need someone to prove that they sold a site maybe through like a well-known brokerage like Empire Flippers, and point to the listing, and then have Empire Flippers say, yes, this site was sold by this person or flipped by this operator. And you need people to vouch. You need people that are well known in the industry that you trust to vouch for other people. I guess that's what it comes down to. And but yeah, just develop longer term relationships with people that you end up trusting. So the investor that I partner up with, we don't use any contracts anymore. We don't even record anything on a Trello board. It's just 50-50. I say we need this much money, he puts up the money, and I go build the site. So I think it just comes down to trust, and it's very hard as a first time investor to know where to allocate your capital. So I would just say, really split it up. Don't just trust one operating company. You need to divide it up, and yeah, don't go all in on one site or one company.
We've talked about operators or operating companies briefly. Can you either mention, talk about
like
companies that are trustworthy, that you say, okay,
yes,
these guys are awesome?
Yeah, so I'm a big fan of Dom Wells at OnFolio, and I've known Dom for a long time. We've been in the same entrepreneurship groups, and he's a fellow Brit, and he's had success with Human Proof Designs, the actual company, and exiting that, and he's as experienced as anyone that I know. And so yeah, on the operating side, when people ask, so I work with website investors that wanting to be active, they're wanting to run, not necessarily be involved in operations, but actually own the operation themselves and employ VAs and team members to run the sites, but have control over that site and not giving away equity or upside. But if someone wants to be a completely passive investor, then that's where an operation like Dom at OnFolio is really good, because they do all the operations. And so I work on the active side, Dom works on the passive side, and I typically will just recommend and mention Dom when an investor doesn't want to manage or think about managing operations. Yeah.
So if you have an investor who wants to be active but doesn't have that experience, I mean, can they come to you and say, will you help me manage this, my first investment ever, when I want to be active? Is that something you're doing?
So I'm not involved in operations at all now. That's something that I got out of 12 to 18 months ago. I found it way too stressful, not the business model that I wanted to be in. I don't like feeling like I lose someone's capital, or waking up to a Google update and it's not my site. That's just not good for my psyche. So that's something that I did for a year or so, and I just work with one investor now that I've got a good long-term relationship with. So I don't do operations with investors anymore. That's something that I did offer. And so I would say, sorry, what was the question?
Well, I was asking if you were working, because you mentioned there was the passive investors and then
yeah.
The people who,
oh, sorry. Yeah. Yeah. So I would say, yeah, try and learn the process of due diligence yourself first. Like, try and understand what the process looks like, and learn from other people that are showing their own thoughts about a website, such as what I do with the newsletter, and then start really small. So go for micro acquisitions. It depends on your level of capital, but yeah, even if you've got 6 figures to invest, I would say start really small. So Empire Flippers, you're probably not going to see sites kind of below 30K typically now. So, but if you've got 100K to invest, then maybe 30K acquisition makes sense for your first one. But you can start a lot smaller than that. You can buy starter sites that don't have revenue, and there are places that you can buy those, and then you can pay for content providers to do the keyword research and get new content. You can pay for links, so you can just buy the services that you need and try and understand how it all works at a very kind of low risk, low downside level. So if you're buying a starter site for $2,000 and investing a few $1,000s into content, maybe another $1,000 into links, you can get but you can start to develop a good understanding of how this all fits together, and without having your 30K asset purchase at risk. So when sites tank, they can go close to zero. So The downside with that approach is, maybe you lose 50% of 5,000 rather than 80% of 30,000. So I just start small and learn the process of acquisitions and operations. But you kind of, you want, a good level of exposure to websites and internet marketing first before you kind of, allocating your own capital. Otherwise, you just build from scratch. Otherwise, you just start with a brand new fresh domain or an aged domain, start writing some content yourself, or, buy 10,000 words from a content provider and start playing with your own website that you own 100% of, and get it to go from 0 page views to whatever. So it depends how active you want to be, but there's a lot of skills to be learned with operations. And that's what I'm trying to completely cover with the process template side to the paid newsletter that's in the Trello board. So I'm trying to break down every aspect of operations into its own SOP. And I use software called Process Streets to record that into a step-by-step that, in theory, my goal is that anyone can follow. So an investor can follow, a VA can follow, and the task gets done. So I want to try and eliminate expertise from managing content sites. So that's something that I'm seeing whether I can actually achieve that, and remove the vast majority of expertise into a step-by-step process. Because I think 80% can be standardized and put into process templates, but you need to be aware of what they are. What are the parts of maintaining a WordPress installation? Keyword research, maintaining content. There's so much to it, but I'm trying to put that into manageable, clear playbooks where this is step 1, this is step 2, this is step 3. But yeah, that's an ongoing process that I'm going through at the moment, and I think I can get to a pretty good product that an investor can purchase and then give to a VA or someone or a team member, and achieve a lot of what an expert operator would typically do. But you're never going to eliminate all the expertise, and it's a pretty crazy space that we play in. I'm trying to eliminate the complexity, but it is still complex.
So I love hearing more about your newsletter, because honestly, I didn't realize that those were some of the goals of the newsletter. I just assumed that what you were doing with this was just curating deals and then sending out something weekly. So this is news to me that this is also part of your newsletter. Yeah,
I started from 0. So I started with no SOPs and no Trello board, and now it's getting pretty complex. And so I'm kind of 50-60% complete with the actual SOPs, and then it's kind of trying to package them together into playbooks that people can follow. So yeah, it's a lot of progress in the last couple of months, and yeah, I'll keep you posted on whether I'll achieve that point where you can just purchase all these process templates and then follow them yourself, and then get someone else to fulfill them. Because a lot of it is repetition, and a lot of what needs to happen, you can actually pay for other people to do. You had any recommendations on top of your newsletter of places where, you think these are high quality resources for someone to go and, jump in on YouTube and follow, or, this particular course or website or whatever? Like, what are some good resources? Yeah, I'm wearing the Authority, or I was. I don't know whether you saw it, wearing the Authority Hacker t-shirt. I'm not sure whether. See. Oh, good, you did. And so yeah, I'm a big fan of those guys. I know Mark, and that's in terms of a course, that's the one that I'd recommend. And yeah, in terms of content creators and experts, Matt Diggity Marketing is a really great place. I learned a lot from him. And yeah, also Website Authority Income, John is a very good place as well. And yeah, so your channel.
Thank you. I don't really put myself up with those guys, but I'm happy to be included.
The way that you're curating and enabling people to understand this is been very impressive. And I don't know. Yeah, Dom on Folio, he's putting out good content. It's there's no shortage of places to discover and people. But you want to know that they are having success themselves, yeah. And all those people that I mentioned, definitely are, yeah.
Awesome. What is the worst advice that you accepted and acted on in your whole internet marketing, online business, website investing sort of career?
Worst advice.
For example, John
Yeah.
Dykstra, I talked to a couple months ago. Early on in his career, someone told him, or he saw a video that said that display ads are a waste of time because you can't make money with display ads. And he said, oh, I guess I should never put display ads on my website. And then 4 or 5 years later, he decided to do it. And now he's making $40,000 a month.
Yes. Yeah. Um, I mean, nothing springs to mind. I mean, I kind of, I'm not sure whether I really take advice from. I just kind of emulate what works, and yeah. So let's say a ton from Matt Diggity and his approach to building sites and flipping sites, and just seeing what works. I mean, just seeing in the SERP what works and how they do it. I mean, you can learn just by looking at who's ranking, top. So I don't know. In terms of big mistakes, I mean, I've been burned on an acquisition. I've been burned by a seller who said there were no PPNs, but removed all the PPNs before selling the site, and the site tanked the next month. So I mean, I've had stuff happen like that, but I can't think of anyone's advice that I followed that I wish that I hadn't. I think just look for what is currently working and emulate that. I don't think you really need advice, but I mean, if someone wants me to look at one of their websites and see what, if they're having issues with a page or a keyword, I'm happily look at that and see. But yeah, I mean, if you're looking for advice, I mean, the Facebook groups, that's what they're great for. So there's a lot of places, a lot of groups that you can ask questions. But
And that was the first part of my interview with Richard Patey. I'll definitely be posting more pieces of it in the future. Before you go, I wanted to show you where you could find out more about Richard or sign up for his paid newsletter. What you're looking at right here on your screen is richardpatey.com. You can also get access to his blog right here. Thank you so much for watching, and we'll see you in the next one.